Welcome to Get Real with Eddie, where we delve deep into the world of real estate with your host, the designated managing broker of Exit Real Estate Specialist, Eddie Rudiger.
And here we go. How are you doing? How was your Memorial Day weekend? Oh, hey, you might want a microphone.
I need a microphone here. Good
Swing
morning.
that. Good morning. How was your weekend?
It was great. For the most part, we had everybody over for our annual pool opening that didn't open.
It was too cold this weekend.
The pool water was 63. I don't think anybody's swimming in that.
No.
And the air was like, what, 65?
It got up to about 70.
Did it? Finally, once the
it
clouds broke on Sunday.
Yeah, Sunday it was up, maybe got up to about 74. Sunday was a little bit warmer, I think, than Monday.
You think so? Well, not for the beginning, maybe towards the end, but that's when we had the party was Sunday. So,
Sunday.
But we had all the kids and grandkids and everybody there to celebrate our 3 grads.
3 grads. You
Yes.
had 2 high school, right? And one.
No, college.
College.
Congratulations, Casey, for University or Iowa, Northern Iowa University.
Say that 10 times fast.
Lily, high school from York High School,
And Fee.
our Fiona from Sandburg Middle School in Elmhurst.
Well, there you go. Look at that.
So it was a big day. 3 grads, the trifecta.
I went over to the aunts and uncles on Sunday for a cookout, and they had their pool open, but no one was swimming. Everybody, we all started with like hoodies on, and then we started. There was baseball being played, there was volleyball being played, badminton, lawn darts, modern version.
Yeah.
It was good. And then I did a bunch of yard work yesterday. I was showing houses, honestly, almost all weekend. I was showing on Saturday. I was showing yesterday. It was a rather busy real estate weekend, honestly. And then I got my listing is under contract that we put up on 3020 Roxbury.
Oh, good.
Yeah, so that went under contract. So
awesome.
Next one coming up, we'll talk about it in a little bit, is Harmony in Romeoville.
Oh, okay.
So that's going to be coming up, I think, next week. We're going to have that. So want to give a big shout out, with it being Memorial Day, to all of our veterans, and thank you for everyone that serves, not just our veterans, but also our police, fire, 911, all of our first responders. Thank you to all of them, because it's a big day. It really is a big day for them. As son of a police officer that was almost fallen, there's a lot of emotions and a lot of things that people go through. And it's not just a day about picnics and cookouts and stuff like that. There's tons and tons of stuff that's going on. And one of the things I wanted to talk about, since we just did have Memorial Day weekend, is that many veterans still don't know about the VA benefit.
Yeah, I'm not... Yeah, some know about it, but don't take advantage of it.
I know, and I don't understand.
That part I really don't understand.
I really don't understand. So, according to a report from Veterans United, only 3 in 10 veterans are aware they may be able to buy a home with no down payment with a VA loan. 3 in 10. That just shocks me.
That statistic is shocking.
It is probably one of the best earned benefits out there, and they've earned it.
They have earned it. They have earned that right. And it doesn't mean they don't have money. It just means they have the opportunity not to have to put it down.
Yeah.
And they've earned that right.
Veterans United explains, come with a list of big-time benefits, including 0 down payment, no mortgage insurance, flexible and forgivable credit guidelines, and industry's lowest average fixed interest rates.
And on top of that, in Illinois, if you are a disabled vet, over 70% disabled, well, you get a discount, but over 70%, you don't pay property
taxes. Yeah. At 30%, you get, if you have a disabled vet at 30% disability.
Right, 30 to 69%.
You get a
you
discount.
Get a discount. Yes.
So, but if you're over 70 the percent disabled, then you're getting a no property taxes, whatever, whatsoever. So I go again. There's no payment, no down payments. One of the biggest perks that many veterans can buy a home with no down payment. That's number one.
Yeah.
Closing costs. There are limits on the types of closing costs veterans have to pay. This helps keep more money in their pocket to finalize the purchase. And last but not least, unlike many other loan types that are less than 20% down, VA loans don't require PMI. Even with the lower monthly payment, this is a big savings. Because you got to figure that PMI into your DTI. So let's say your PMI is $150 a month. That's $150 a month less house you can buy.
Right.
That could be 20 grand.
I was just going to say, that's another 20 grand in house.
10 to 20 grand in house, easy. So, really, if you are a veteran, make sure you're talking to the right lender. And the reason why I say the right lender is, I just, not long ago, I had an offer come in on a VA loan. It was a VA loan.
Mm-hmm.
And I called their office voicemail. There was no cell phone given. Called the office, got voicemail. Called the office, got voicemail, left a voicemail message. Sent a message on LinkedIn, sent a message on Instagram. And this is not just for VA loans. This is for any loan. I was the listing agent. I was trying to vet the loan and vet the financing for my sellers.
Yeah.
I could not reach the lender. Could not reach the lender. The lender was not making any efforts whatsoever to call me back.
Yeah, you can't vet the loan, then.
It gave enough. My client was ready to sign the deal, in my opinion. It gave enough time for another offer to come in and beat them out.
There you go.
If they would have turned around and the lender would have picked up the phone
or called you right back in a timely manner,
they would have had a deal and that buyer would have got it. So you got to work with the right people. And I'm sorry, I get it. You're a lender. You work for a bank. You want to work 9 to 5 hours. You want to work 9 to 5 hours, don't be on the mortgage lending side. Get into commercial lending, get into residential banking, not residential home mortgages.
Yeah.
Because guess what? I am going to be picking up the phone and calling you to find out, did you run credit? And why am I asking that question? Because I've had lenders tell me no. Do you have documentation? Tax returns, pay stubs. I have lenders tell me no.
Have you verified funds for down payment, etc.?
I have had lenders tell me no. I'm just going to beat this horse because this came up a little bit ago, and it benefited my seller. My seller ended up with a higher offer.
Mm-hmm.
But costs a buyer, got to work with the right people. You got to work with the people that pick up the phone. It's residential real estate, and it is a seller's market.
I have lenders who I'll put in the offer and turn around and tell my lender offers in, and they will pick up the phone themselves and call the listing agent themselves on behalf of the buyer.
And I get it. When I call these lenders up, I'm like, all right, I got to ask you stupid questions, but please understand, I need these yes/no questions because, believe it or not, people have told me no.
Yeah.
So I need to ask because I promised my seller these are the questions we're going to ask. Oh, okay. And at the end, then I let them give that, the 2-minute speech on why they're the greatest thing since sliced bread.
Yeah.
Which, sometimes you get, oh, I didn't know you could do that. Oh, okay, great. So it's not like the 2-minute speech is bad. It's great. I want to hear a lender selling the client, saying, yes, are selling their products, that we were the best, we can get stuff done, whatever it may be.
Yeah.
I want
The
to know.
lender's selling themselves.
That too.
Hey, I'm a professional, I'm experienced. You want to know that if some bump in the road does come up, they are going to be able to handle it on the lending side so the deal doesn't fall apart.
So, did you hear what happened down? Did you see the article I sent you from Down Under?
Yeah.
I thought this was great. They're talking about wanting to buy a house and finding a way. So, a 36-year-old individual, Damon Gordon, said he was casually aware of regional programs in South Wales which offered 10 cents for every can designated at an exchange point. So basically, this individual went around and collected cans.
Yeah.
Collected cans and turned them in for the 10-cent deposit.
Yep.
Because I'm assuming they have a deposit. Because,
They have a deposit.
because
sure.
you're not getting 10 cents a pound on aluminum. I don't think so. I mean, it might be a little bit more.
whatever
yeah.
whatever they're getting for
But
them. But
10
money.
cents a can is a lot of money.
I don't know that it's 10 cents a can.
That's what it says.
Does
it said 10 cents a
Did it?
can.
Okay. Oh,
All
it
right.
does. Okay, offer
So-
10 cents a can for every can.
So he went around and he collected cans, glass bottles, and turned this all in to get a down payment on a house.
Yeah. That's ingenuity.
Yeah. That's ingenuity. I thought it was a thing. Gordon and other volunteers separated 40,000 recyclable containers from the refuse. He went to a festival.
That's
Walked
crazy.
away with an amazing $4,000.
After just one event. Yeah.
He ended up netting $45,000 for a deposit down on a 2-bedroom house. So, I mean, there's...
It took him, it said 3 years. It took him 3 years to save. Took him 3 years. He'd saved $20,000.
Mhm.
So, I mean, it's not going to come instantaneously, but
No.
you know what? That's pretty sweet.
But it's like having a part-time job.
Yeah.
And I bet you know what, nothing personal. Why does it seem like it was something that he was just having a blast with?
I don't know.
Because it was different. It was out of the box thinking. I mean, he could have went in 3 years and got a second part-time job. All right?
Yeah.
And he probably would have made the extra 25 because it looks like he saved 20 on his own. And he would have probably made the extra 25 instead of doing it this way. But still, I'm just pointing out, there are ways. There are ways to get things done. And I just thought this was a great story that he was able to get himself a 2-bedroom house.
Yeah. I love that.
Yeah, I mean, why not put the effort in?
Well, and just sometimes it just needs to be a little more creative. Okay, you've got this job and you've got kids and you've got other things that you have to get done, and maybe you can't take a regular quote unquote part-time job, but you could do something like this where it's you do it when you can.
Oh, yeah. Yeah, and that I think that's the aspect of it. It gives you the flexibility
Yeah.
of it. So
Because a lot of people don't have a whole heap a lot of flexibility. They have
I don't know
life.
where would you turn in aluminum cans nowadays? Because remember, my grandpa used to work for Reynolds Aluminum. Remember, they had
Yeah.
the semi trucks parked like back behind the Crest Hill Hillcrest.
Yeah.
And you go. That was like one of like multiple locations, and you go turn in your cans, and you turn in your paper.
Yeah.
So I mean, there tons of stuff. So, yeah, I think that's just impressive thinking.
I do too. I think
Yeah.
it's great. Out of the box thinking to get where you're going.
Yeah.
Love that. Yeah, it's too bad we don't have centers like that, to take advantage of. I don't know. Well, some states still have deposits. I believe Michigan still does.
Michigan
Deposits
has.
on bottles. And
We never had a deposit in Illinois that I remember. Was there?
back in the ancient times.
There was a deposit for the glass.
For glass.
For glass. Okay. So,
I don't remember ever cans.
I don't
It seems
remember
like
cans.
we did when I was a kid.
I remember when I was a kid, we'd have we'd save all the newspapers up,
Yeah.
and then we'd take them down to school. When I went to St. Mary Nativity, because they'd have a big paper drive. So
Oh.
you come turn in all your papers and stuff, and then the school would get money from the paper drive. I remember the paper drives being big.
Yeah. Well, and everybody had papers because everybody got the newspaper every day.
Yeah.
It's a whole different.
Yeah.
Yeah.
Yeah. It was a whole different way of getting information and news. Absolutely.
Yeah.
So, why would you move if you have a 3% mortgage? Why would I give that up? Is a big question going on right now.
Well, there are reasons to give it up.
I agree. So, I mean, what are the chances that your house is still going to be the right house for you 5 years from now? Or even 5 years from when you bought it. Maybe you're in year 4 or 5. A lot of times, houses, you start outgrowing houses or they're not fitting your needs about year 5. So, Fannie Mae asks more than 100 housing market experts to weigh in on where they project home prices are headed, and the consensus is clear. Home prices are expected to rise at least through 2029.
Oh yeah, I see that happening. Definitely.
So December over December as of Q1 this year. So this is the forecast for this year, and this is where they see December over December's being. So we're going to be up in 2025 3.41 nationally, keep in mind. All right? 3.33 in 2026, then another 3.72 in 27, 3.98 in 28, and 3.98 in 2029.
That's some pretty aggressive growth.
You're looking
At
at
the 4%.
15, 16, 17, 18. I'm going to say you're about 18% growth over the next 5 years.
Yeah.
You know, you're sitting at about 18% growth over the next 5 years. I think that's
pretty aggressive. Yeah.
And I think that's actually low for our area. I think we're going to be higher than that. Because I think we're going to be higher than 3.41 this year for sure.
Oh yeah, I'm seeing where they kind of loaded in on the back end a little more aggressively. I see ours being quite a bit higher at the beginning of that and maybe leveling off.
Yes. Yes, I can see that.
I could see where that would happen.
So, your home equity is one reason why you give up the 3% rate. Is because now you're able to move more equity into the next buy, and there's a chance that maybe you're getting a bigger, larger house, but your monthly payment's going down because you're putting more money down.
Mm-hmm. Or at least staying the same. The very least staying
Could
the
be,
same.
yeah.
But you
Getting
have more house.
more house. Or less house. Depends on what you're doing.
Yeah.
So, I mean...
Or you're upgrading. Or
So those numbers came from Fannie Mae and the Home Price Economic Survey. And when you look at it, if you take those as basically, okay, this is what's going to happen. Basically, a $400,000 house is going to be worth $79,304 more. So almost $80,000 in the growth in the next 5 years.
It's pretty amazing when you think about it.
And then when you add in the fact that mortgage rates are projected to come down, are they going to come down to 3%? No.
No.
It was a pandemic.
Yeah, that was just... And even before the pandemic, it was coming down a little bit. But that's historically low. It's not... Yeah, definitely a unicorn.
So, the projections are that it's going to be moving down. And right now, I think Wells Fargo is the most accurate on that map when you look at it. So you look
Thank
at
you.
Wells Fargo. No, not Wells Fargo. I'm sorry. MBA forecast. MBA, Mortgage Bankers Association. They've got it ticking up.
Back up to 7.
Yeah, and then coming down, which I can see happening, because we're kind of like in between 6, and rates did shoot up over the weekend a little bit, but now I think they're coming down this morning. Fannie Mae forecast has it just going down from where we're at, and they're getting it down to 6. Wells has it going straight down to 6, and then coming back up. And then the MBA has it going up to 7 and coming under 6.5.
Yeah, but this is, they've got it projected out going down to 6 in 2029.
Yeah, I mean, that's...
Not any day soon.
And not any day soon. Now, there are a lot of talks. I was catching the news this morning. I'm sorry, yesterday. I heard him talking on the Fed is looking to probably cut 2 times this year now. So before they were going to cut 4 times, then they weren't going to cut at all. Now they're going to cut 2 times.
Maybe twice.
Maybe twice. So we'll see at the next Fed meeting what happens and where they're at. We could use just 1 cut. Just give us 1 cut. And I think that's going to stimulate and break some things loose, honestly. But we'll see what the Fed thinks. I mean, right now they're really, really homing in and watching the inflationary numbers and trying to figure out, okay, what's inflation doing? Is it going down or is it going up? I mean, that's the biggest aspect of what they're trying to calculate and trying to figure out. So,
yeah, the financial markets, the world, global wars, all kinds of crazy things add into those.
Yeah, exactly.
A lot of unknowns.
A lot. Where do we want to look for numbers today?
Where are we driving to today? What haven't we looked at in a while?
Have we looked at Lockport?
We have not.
Did you want to do Lockport?
Sure. Good old Lockport.
If I can get it to come up. There we go. City of Lockport. I know you like resale only.
Yeah. New construction just throws everything off.
Median sales price of Lockport is up 4.3% to $315,000, while the average is up 2.1% to $334,036. The original list price is up 6.1% to $364,142, and the median sales price is up 8.4% to $335,000. Your market time in Lockport is up 20.8% to 29 days, but that's been pretty steady for a while now. It was at 28 days, all going back to September 24. It really took off. It was at a low, going back to 24 days. So going up just to 29 days, it's not a huge jump on market time, even though statistically we are higher than we were last year by a good amount. Percentage of average list price, all right, is 101. They're getting percentage of last list price. I'm sorry. Yes, percentage of last list price. They're getting 100.1%. That is down 0.2. The median is just 100%, and it's been 100% forever.
Yeah.
Just getting 100%
That's kind of
Lockport.
crazy.
Yeah. Month supply is up to 1 month in Lockport. So I don't think you have a huge market meltdown going on. It's 1 month supply. Showings per listing is down to 8.6. That's, down 20%. But again, when we look at April of 2019, it is still higher than April 2019 because you're 2019 you're getting 6.1 showings, and nobody was saying the market was melting down for a lack of thing. And there's less inventory right now. So, all right, we're gonna hit a break because we are running a little over, and I want to talk about the whole sky is falling because there's more listings on the market when we get back after break. Keep it here with Get Real with Eddie.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Rudiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Are you ready to make your next move in real estate? Look no further than Exit Real Estate Specialists, your innovative leader in the industry. At Exit, we're not just about transactions. We're about building relationships and fulfilling dreams. Step into a community of empathetic, well-trained professionals dedicated to your success. Our Exit Real Estate professionals are more than just agents. They're your trusted advisors and allies in the journey of buying, selling, or investing in real estate. Whether you're selling your home or searching for your next investment, trust Exit to provide an excellent experience from start to finish. Our commitment to putting people first means you receive personalized attention and support, ensuring your real estate goals are met with success. Call us today at 815-823-5478 or visit exitrealestatespecialist.com to learn more. Exit Real Estate Specialists, exceeding your expectations every step of the way.
Doing everything for you except the moving, and be glad. It's Get Real with Eddie.
All right, so there's more homes for sale.
Thank goodness.
It's not a warning sign. It's an opportunity. It is literally an opportunity.
People need and want to move. We need inventory. So that's a good thing to have inventory.
So, active monthly listing count in the thousands per Realtor.com. In 2019, in May, you were looking at, can't tell the difference between 2019, 2018, and 2017. They're all like the same colored gray. But you're basically around 100,000, all right, in the thousands. So you're looking at basically like 1 million to 1.2 million in listings, okay?
Yep.
2020, we were about 900,000. All right. 2024, we were probably around 700,000 in May. 2023, we're around 590,000.
Yeah.
2022, we're probably around, I'm going to go with 450.
Yeah.
And we're
Yeah.
probably 430 in 2021. Right now, in April of this year, 959,251 year to date. That's a 30.6% increase year over year. Okay?
Yeah.
We didn't have any listings last year. Nobody has been selling their house since 2021, but all the buyers are in the market.
Yeah, we still have buyers. And we have more buyers. The world doesn't stop. We don't stop needing a place to live. Our population continues to grow, so we have buyers.
And it's not just about the population, because I had this conversation.
No,
with,
it's not just population.
the true number is household formations.
Yes.
Okay? That's the true number, is household formations. Because, yes, all right, you have a household, there's 3 kids. Each one of those kids go out and form their own household. Okay?
Right.
All right? But in some aspects, maybe they're moving out of mom and dad's and moving in with a significant other. That's one household
Yes.
formation.
Maybe they're splitting up.
That was the divorce. Now you go from one household formation to 2 household formations. So that means more housing.
Right.
I mean, there's all kinds of scenarios. And I think people forget a very interesting statistic.
What's that?
Did you know there are more people alive today than the total number of people that are buried in this earth?
The total of global population
Yes.
is greater than,
The total number of people
That have died.
lived, that have lived before us.
I would believe that.
So, I mean, you add up every generation. I've heard this online multiple
Yeah,
times.
I'd have to really.
You would think, oh no, that can't be possible.
Oh,
but
it's quite possible. Well, because population of the world was not very many, survival rates of people, all that wasn't what it is now.
I agree. So, I mean, just keeping that in mind, we need more housing. We don't have enough housing stock. And what we need is, a lot more different options in housing stock. Not everybody wants a single family yard on an acre of lot.
Right.
I got a quarter acre and I can barely cut that. I was cutting grass on Memorial Day and I'm sitting there going, I'm exhausted.
Yeah.
I'm tired. I need to get a riding lawnmower.
I was just going to say, you need a Cub Cadet.
No sponsorship here for that.
No. Sorry, my husband has one, and that's what he enjoys, mowing the lawn. That's kind of his thing.
I would probably enjoy mowing the lawn too if I had a rider. I'll be honest. I've got a self-propelled. And don't get me wrong, I still need the exercise. That's probably why I haven't got the rider. That and our gate between the front and the backyard.
Yeah.
Not the largest of gates.
Oh, yeah.
So that will make it challenging.
You'd have to widen the gate.
I would have to widen the gate. Absolutely. So.
Yeah.
It's just interesting. So they got a chart up here. This is pretty interesting. I like this. Cumulative housing deficit or surplus.
Deficit.
I'm sorry.
No.
Deficit or surplus since 2012. All right.
Mm-hmm.
So this is from the census and realtor.com. And it's looking at the number housing surplus or housing a deficit. So in 2012, we had a deficit. In 2013, we had a surplus of 900,000.
Yeah, that I find that interesting. In 1 year, we went from a mild deficit to this huge surplus.
I think we started really building again.
That could be.
I mean, and that was just, and I think this is based on sales data, not on, well, maybe it's population. I'm trying to figure out how they calculate.
Did they?
But in 2014, we had a deficit of about maybe 25,000. In 15, we had a surplus about 175. 16, we had a surplus of about 590, 80, somewhere in there. 2018, we went to a deficit of over $1 million. 2019, deficit over, almost 1.4 million. 2020, we had a deficit. This has got to be based on demand. It's supply versus demand curve.
Yeah.
Because that's the thing. When were people looking to buy and when were people not looking to buy? That's what this is based on. So 2023 was the worst. We were 2.2, almost 2.575 million units short.
Well, I would like to know what happened between 2016 with that 590, let's say 590, the surplus, to 2018 with this huge deficit.
I'm going to say this is your normal carryover is how they're calculating that in your market space. So usually we start in a normal time. Now we haven't done it since 2019, but normally you start off with 1 million listings.
Right.
At the year.
So what in our world changed? Was it interest rate? I mean, obviously as interest rates went down, demand went up because more people could afford housing to buy a house. But what else was going on in 2017, 2016, 17? I don't know. It's a blur. So
Nothing that I could remember.
that's what I mean. Like, was there anything else that stood out?
My kid was born. I mean, 2016. I don't think he had an impression on the housing market, though. I mean,
Probably not.
probably not. So
His own personal housing market, perhaps.
well, that was already taken care of and established in 2014. So
Yeah.
we're good there.
I was thinking more like Mom was his housing.
No, that was well
For 9 months.
for most of 2016. Actually, yes, actually all of 2016. So
See, there you go. His housing was taken care
his
of.
housing was taken care of. I see your point. So
Yeah.
um,
Okay. Do we got a house? Do we have a house?
oh, hey, we've got a new listing coming up. We kind of talked about it. 13 Harmony Lane in Romeoville, Illinois, is a 3-bedroom, 2.5-bath, single-family house. Now, this is interesting. These are 0 lot line sets. So you are very, very close to the neighbor. It's a $315,000.
So it's not attached. It's
not
just
attached. It
tight.
creates the illusion of attached, but they are, what I would call a 0 lot line, because you're within 2 feet of the lot line.
Oh.
There's nothing attached whatsoever, not even the garage.
I was going to say, not even the garage.
No, so Roxbury that I just put under contract.
Yeah.
That one, there was an attached between the 2 garages. There's a kick out on the garages, and that's the only thing that touched.
Yeah, that's like Chloe's.
Yes. But on this one, yeah. So this is just an outstanding location. It's right behind that Jewel Osco on Weber Road. You've got a Walmart nearby. Amazing food. I'm telling you right now, Sushi Train is nearby if you like Japanese food. All right, if you like sushi and stuff along those lines. Amazing, amazing, amazing. So, not to mention...
So, do you like it?
I do. I had a good friend, Melissa. We used to go to Sushi Train all the time.
Yeah.
All right, and I had just took friends of mine there not long ago because we went to go to one and they were closed for something. Turned out the chef cut his hand. That's why they were closed.
Oh, not good.
He's okay. Chef was okay.
Oh, okay.
So we went
No
over.
missing
No
parts?
missing nothing, and it wasn't even with the knife. He cut it on a door frame or
Oh,
something.
jeez.
Yes. So, but yeah, no. 3-bedroom, 2.5-car garage. Good size unit. Definitely something to look at. So definitely check out 13 Harmony Lane in Romeoville. That's going to be coming up probably next week. We should have that up on the market and going from there. So, all right, we're going to hit the break. After the break, what do I want to talk about? Let's talk about the adjustable rate mortgages when we get back after the break. Keep it here with Get Real with Eddie.
It's Eddie Rudiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Are you ready to make your next move in real estate? Look no further than Exit Real Estate Specialists, your innovative leader in the industry. At Exit, we're not just about transactions. We're about building relationships and fulfilling dreams. Step into a community of empathetic, well-trained professionals dedicated to your success. Our Exit Real Estate professionals are more than just agents. They're your trusted advisors and allies in the journey of buying, selling, or investing in real estate. Whether you're selling your home or searching for your next investment, trust Exit to provide an excellent experience from start to finish. Our commitment to putting people first means you receive personalized attention and support, ensuring your real estate goals are met with success. Call us today at 815-823-5478 or visit exitrealestatespecialist.com to learn more. Exit Real Estate Specialists, exceeding your expectations every step of the way.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Get Real with Eddie, where everyone deserves the opportunity of home.
All right, have you ever had a client use an adjustable rate mortgage?
No.
I didn't think so. They were really popular back in the day, and they're starting to come back. Okay?
Yes.
It's not that they ever went away. It's the market conditions that made them prevalent kind of went away. And now the market conditions, when you're talking about, 7 or 8% interest rates, okay, well, I'll take an adjustable on a 5 or 5.5 for 5 years, and then it goes up to 9. Why would you do that? Well, because you're going to probably refinance. A refinance is going to cost you money, but it's going to be less money than what you'd spend in interest on taking a 7 or an 8% interest rate for 30 years. Yeah. I mean, for over 5 years. So you're going to want to be able to refinance that. If you remember the crash in 2008, this may bring up some concerns, but don't worry, today's ARMs aren't the same, and here's why. Back then, some buyers were given loans they couldn't afford after the rates adjusted, but now lenders are more cautious, and they eventually evaluate whether you could still afford the loan after the rate increase. So that's the biggest thing. Don't assume the return of the arms means another crash. Because now they're taking, before they didn't price that in. They only looked at, hey, guess what? You can afford it for the next 2 years. You're good.
You're
That's all
in.
we don't care. That's all we cared about. Now they're looking at, okay, can you afford it after the adjustment now? So it's making a big, big difference because, okay, yes, the rate might go up to 9. Yes, you probably are going to refinance, but based on the numbers that you have, you still could afford it at 9.
Worst case scenario.
And a lot of times it's not even going up to 9.
Right.
It's going up to what the current rate is. They're just doing this, basically, it's almost like a buy down. They're doing these adjustable rates just to get you to use their product versus another product.
Mm-hmm.
So more buyers are using adjustable rate mortgages. The average percent total of mortgage applications that are for adjustable rate is just near 8%. You're probably about 7 3/4. All right, of the total loans out there are looking at adjustable rate mortgages.
Yeah.
I mean, if it gets you in and it gets you in the house and you're just going to stop paying rent, do it.
Oh, yeah.
Just make sure you have a plan for that rate increase.
Right.
You know, and look at, okay, when rates do drop, because everybody's saying rates are going to drop, rates are going to drop, rates are going to drop. Well, when they drop, that's when you refi.
Mm-hmm.
And don't sit there and go, oh, well, I'm going to wait for them to come lower. No, refi them then, and then if they go lower, refi again. Don't take the risk.
Right. Because nobody has a crystal ball. So you got to make the
No.
moves.
You make the move. You play the hand that's in front of you.
Yes.
You play the hand that's in front of you. That's the biggest aspect. So, Business Insider explains the difference between a fixed rate mortgage and an adjustable rate mortgage. With a fixed rate mortgage, your interest rate remains the same for the entire time you have the loan. This keeps your monthly payment the same for years. Adjustable rate mortgages work differently. You'll start off with the same rate for a few years, but after that, your rate can periodically change. This means that if the average rate have gone up, your mortgage rate will increase. If they've gone down, your payments will decrease. I gotta be honest. I refinanced my rental property way back in the day when I still lived there.
Oh, mm-hmm.
I took an adjustable rate mortgage on it.
There's nothing wrong with them.
I've never refinanced it.
Really?
Never.
Well, they've always been lower, probably.
Mine is tied to the Fed rate,
Oh.
not to the bond market. And so every time, it has always been less than what the current interest rate's been. So I had a rate at one point almost at 0. It was like a half a point or a point because during COVID, the Fed
Oh, yeah. It was,
dropped the rate to nothing.
yeah.
So it's like, I think I'm a half a point above that. Now, it only adjusts every 6 months. And it only can adjust by so much, but it was down for so long, it got down
Literally
to like
free money.
2%. And I just kept paying my payment, paying my payment, paying my payment.
Yeah.
And even right now, if I went to, especially now, because now I did it when I was an owner occupant. Now that I don't live there, that rate would probably be a 9% rate because it'd be investment property.
Mm-hmm.
I think my rate is under 6 still. I'd have to go look at my paperwork because I haven't looked at my rate in a while to see if it's worth looking into a refi. But it would be probably a 9% rate if I wanted the refi. So they can work, and it's always been, there's never been a rate better than the rate I'm getting. I've always been there. Yes, I've gone up in rate. I could have locked in at a 4% rate probably at some point, but I didn't. But still, I'm coming out like a champ.
Yeah, that's crazy.
Now, there's pros and cons to an ARM. All right? An ARM is kind of what I was talking about earlier, and that is where you got a rate that's short term and then it just goes up.
Yeah.
Okay?
Usually 5 or a 10-year.
Because ARMs are, so Business Insider
3.
explains,
Go ahead.
because ARM rates are typically lower than a fixed mortgage rate, they can help buyers find affordability when the rates are high. With a ARM rate, you can get a smaller monthly payment or afford more house than you could with a fixed rate loan.
Mm-hmm.
So it makes a big difference. Barron's explains there's a potential for higher costs later, and that is unadjustable rate loans offer a low initial rate, but after the recalculated period, that is a plus for borrowers if the rate come down in the future, or if a borrower sells before the fixed rate ends, it can lead them into making more money, but it also can end them up with higher costs if they don't sell that. So bottom line is, you know what? There's ARMs, there's adjustable rate mortgages out there. These are other options and other tools. You definitely want to check it out and go from there. All right, that wraps it up for Get Real with Eddie. Don't forget, check us out online 24 hours a day, 7 days a week at GetRealWithEddie.com, talking about your largest investment, your home.
Thanks for listening. Eddie Rudiger is the designated managing broker and owner of Exit Real Estate Specialists, located at 2750 Caton Farm Road, Joliet. License number 481014247. For questions, call Eddie at 815-823-5478.